Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FRESHPET INC quarterly report. FRESHPET Inc. offers a variety of businesses and services, including manufacturing of natural fresh meals and treats for dogs and cats, distribution of these products to the United States, Canada, and Europe, marketing of its products under several brand names, including plus FRESHPET dog food, cat food and dog treats, plus Dignation, fresh treats plus Dog Joy, fresh treats sales through various channels, including plus company-owned branded refrigerators, FRESHPET fridges, plus grocery stores, plus mass retailers, plus club stores, plus pet specialty stores, plus natural food stores, plus online sales. FRESHPET Inc. stock price crash. A year of disappointment in the past year. FRESHPET Inc.'s FRPT stock price plummeted by 62.77% due to a series of disappointing financial updates and analyst downgrades. The company's failure to meet analysts' expectations in its Q4 2024 earnings report was a significant blow, with concerns about shareholder dilution adding to the woes. The trend continued into 2025, with FRESHPET reporting slower growth, operating losses, and reduced guidance in its first quarter results. Analyst downgrades from UBS and TD Cowen further exacerbated the decline, citing concerns about high valuations and increased capital spending requirements. The stock reached a 52-week low of $66.98 in July 2025, with market conditions and investor sentiment shifting against FRESHPET. The departure of Chief Financial Officer Todd Cunfer in October 2025 added to the company's woes, as it struggled to navigate fluctuating demand and competitive pressures. While FRESHPET showed a brief rebound in November 2025 following positive Q3 results, the damage had already been done, with the stock price still reeling from the significant crash experienced earlier in the year. The primary drivers of revenue growth for FRESHPET are largely attributed to its expansion into new international markets, growing demand for natural fresh meals and treats for pets, and increased sales velocity from its refrigerated products. The company's strategic distribution and penetration of major classes of retail have also contributed to its revenue growth. Additionally, consumer trends such as pet humanization and a focus on health and wellness have driven demand for FRESHPET's products. Key statistics include 14% increase in revenue for the 3 months ended September 30, 2025, compared to the same period in 2024, 15% increase in revenue for the 9 months ended September 30, 2025 compared to the same period in 2024, 12.9% volume gains and 1.1% favorable price/mix overall. FRESHPET's revenue growth can be attributed to its successful expansion into new markets, strategic distribution efforts, and alignment with consumer trends. Net income experienced significant growth over the past year, with a 758% increase in the 3 months ended September 30, 2025, and a 265% increase for the 9 months ended September 30, 2025. This substantial rise in net income is attributed to various factors. However, profit margins tell a different story. The gross profit margin decreased by 0.9%, while the adjusted gross profit margin increased by 1.5%. Meanwhile, selling, general and administrative expenses, SG&A, as a percentage of net sales decreased by 4.8%, with an even greater decrease in adjusted SG&A. These mixed results suggest that the company's growth is not solely driven by improved profitability, but also by other factors such as increased revenue or reduced costs. The company's financial performance indicates a significant achievement in its operations. A key indicator of this success is the generation of positive operating cash flow. This means that the company is able to produce more cash from its core business activities than it spends on operational expenses, investments, and other obligations. This positive trend is confirmed by multiple pages within the financial summary, providing a comprehensive view of the company's financial health. The consistent demonstration of positive operating cash flow suggests a strong foundation for future growth and stability. The company's debt level has undergone significant changes in recent years. Total debt liabilities increased from $519,518 to $567,137, indicating a rise of approximately 9%. Notably, long-term operating lease liabilities surged from $2,213 to $65,081, a substantial increase of over 29%. However, interest expenses have shown mixed results. while net interest paid decreased from $13,766 in 2024 to $11,875 in 2025. The overall interest expense increased by $0.6 million to $3.6 million. This suggests that despite lower net interest payments, the company's growing debt level has led to higher interest expenses. The company's financial performance has shown mixed results across various regions and segments. On a positive note, net sales have increased by 14.1%, input costs have decreased by 12.2%, and consolidated net income has seen a significant jump from $11,894 to $101,663 for the 3 months ended September 30, 2025. However, some areas require improvement. Quality costs have risen by 17.1%, and logistics costs have only marginally decreased by 4%. Furthermore, Europe has contributed less than 1% to consolidated revenue for the 9 months ended September 30, 2025, indicating a relatively poor performance in this region. Overall, while some segments have shown promising growth, others need attention to optimize financial performance and maximize revenue. Management is optimistic about the company's outlook, citing opportunities for future growth through leveraging unique business elements. They aim to meet sustainability targets, expand capacity, introduce new products, and improve existing ones. To achieve this, they plan to increase marketing investments, mitigate adverse input costs through cost management and price increases, and focus on growing the business despite macroeconomic factors. The company also expects cash flow from operations, access to capital markets, and strategic initiatives to support continued growth and margin expansion. There were no notable acquisitions or divestitures in this period, indicating a stable financial landscape with minimal changes to the company's assets and investments. The company has a history of receiving dividends from its investments. Specifically, it has received dividends from one of its investees. However, there is no record of the company engaging in share buybacks. This suggests that the company's focus has been on generating income through dividend payments rather than reducing its outstanding shares. Concerns about inventory buildup or supply chain disruption. The financial summary highlights concerns regarding inventory buildup and supply chain disruption. Specifically, there is a notable increase in variable lease cost capitalized to inventory, indicating potential issues with inventory management. Additionally, inventory levels have decreased across all categories from 2024 to 2025, which may suggest that the company is struggling to manage its inventory effectively. Furthermore, the summary mentions a reserve for inventory obsolescence and a decrease in inventories, net, of $10.9 million. These figures indicate that the company is facing challenges with managing its inventory levels and may be at risk of inventory buildup or supply chain disruption. While there are no specific details about supply chain disruptions, the potential for such issues is mentioned as a concern. That concludes the financial summary for FRESHPET INC. Feel free to comment below, and I will be happy to answer them when possible.